Hi, my name is Chris Bird, and my background is this. I'm an ex-IRS agent. I'm a certified financial planner, enrolled to practice before the IRS. But for the most part, I speak nationally to realtors, accountants, attorneys on tax strategies, new tax law, and things like that. So what I'm going to do now, I want to talk about the benefits of the S Corporation, otherwise known as the Subchapter S Corporation. It's been around my entire career, and I will tell you with a smile that as an IRS agent for 16 and a half years, they never trained me on S Corporations. I didn't learn about them until I left the IRS. So this is the most popular entity choice of small business in this country, no ifs, ands, or buts. There are over 6 million S corporations now, and the last time I looked, 85% of all new corporations that form in this country elect S corporation status with the IRS. So first of all, let me just set up a couple of ground rules. S corporation is only for the self-employed, and in my opinion, only should be considered by people who are making at least 70, 80 to 100,000 or more a year. Not for somebody making less than 70,000. So don't think about it now, but think about it down in the future, especially for my new realtors, everybody who are just building their careers. Maybe not yet, but when you get to that 70 or 80, it's time to have a discussion with your accountant. Now, it's not for everybody, no ifs, ands, or buts. For example, if you've got high health care expenses in your life that you are shelling out that money for, well, maybe the S Corporation isn't the way to go. Maybe in that case, the C Corporation might be the way to go. So I'm just telling you that the S Corporation is not literally for everybody, but it is for most small business people. Now, why? All right? And look at the overhead behind me just for a second, if you would. I have a chart on how the IRS sees entity choice in this country. And clearly, 2/3 are still sole proprietorships. Another 12% is S corporations currently, all right? Another 6% are LLCs, and then partnerships and C corporations. So the move I've got is I want those that are sole proprietorships to consider this, or the LLCs to consider the S corporation. There's the move, everybody, to get those types of entities into the S corporation. For what reason? To save Social Security taxes. Let me say it again. To save Social Security taxes. That is the reason that your speaker has been an S corporation since, I think, 1991. To save Social Security taxes, which are a huge cost every single year. Now, here are some characteristics of an S corporation, but single taxation, individual rates, and only on Form 1040. More S corporations in existence than any other entity, and I've got over 5 million up here. It's now over 6 million. That's how fast that they are forming. And the whole issue is this. Done properly, there's an opportunity to reduce your Social Security tax because you've got a certain level of profit, whatever that profit is. That's your gross commission income, realtors, minus all of your business expenses. That's what I call your profit. Then you have to decide how much of that profit you are going to declare as salary and how much of that profit you're going to take out in distributions. And the key is that only the salary is subject to Social Security taxes. The distributions are not subject to Social Security taxes, but they are obviously subject to income taxes. Now, let me give you just a good example. And I've got a high number on the board, everybody, but it could be $300,000 profit. It could be $100,000 profit. It just depends what group I'm talking to. But here's what the board behind me says. I've taught this 1,000 times. If you were my client, and by the way, I'm not taking on any new clients, but if this was a client of mine and they had a $300,000 profit, and I'll change that to $100,000 in a minute. But if you were making $300,000 profit, I would have you take $130,000 salary, all right? Remember, only the $130,000 is subject to Social Security taxes. And in this case, you're going to owe $19,890 in Social Security taxes. Now get this through your heads. That's in addition to your federal income tax. That's in addition to your state income tax. You owe another 20 grand in Social Security taxes. Now watch this. Ignore me Ignore me and stay a sole proprietorship or an LLC, tax is a sole proprietorship, you owe Social Security taxes on the entire $300,000, which is now almost $28,000. It just saved you $8,000. Now, one of the downsides, just to be aware of this, nothing is perfect, all right? The cost is lower Social Security benefits when you get there. So the rest of the story is this. Take that $8,000, like Kay and my wife and I have done for the last 31 years. Take that $8,000 and invest it, all right? And we have invested in rental properties, everyone, so that the cash flows from the rentals will overcome the lower Social Security benefits that we are receiving. So please talk to your accountant about this. Too many accountants let this slide. Talk to your accountant. If they don't agree, get a second opinion. Thanks, and see you in the next webinar.